Good afternoon, everybody. We're ready to get started. Thank you so much for joining NCSL here at our two-part series on student loan forgiveness in focus. I have to say, it is not every day that we are giving a briefing in which there is breaking news. So that has really scrambled a lot of what we were preparing to talk about today, but we're really glad you're all here. And we're very grateful for the Department of Education to join us, and for Ashley Harrington as a senior advisor over there to talk about everything that the administration is doing with regards to student loans. I just want to give just a quick, again, reminder of why we're having this series. And so, we knew that there's a big conversation going on, sort of a national conversation around student loan forgiveness and whether or not student debt should be canceled by the president or by Congress. But we also knew that there was a lot of actions in the loan forgiveness space that were already ongoing that were kind of flying under the radar. And those actions themselves, they had real implications for states and state legislatures. So just a reminder of where we were at last week and what we're hoping to accomplish today before I turn it over to our guest. We were looking at just the broad forgiveness authorities that exist at the Department of Education to deal in issues with student debt relief. Last week, we talked about income-driven repayment, and that's perhaps the most common path that borrowers could find forgiveness for the remaining balances on their loans after making enough successful payments over a 20 to 25-year period. This week, we brought on the Department of Education primarily to talk about the public service loan forgiveness waivers that are being offered through October 31st of this year. I had also asked, and they agreed, to talk about some of the other major forgiveness activities that are happening over the department related to borrower defense to repayment, which is a program in which borrowers that make successful claims of fraud are able to receive relief on their loan balances, as well as the total and permanent disability program, which provides loan forgiveness to borrowers who are unable to pay back their loans to a total and permanent disability. The one thing we weren't sure if we were going to be able to talk about is broad-based loan forgiveness, but the president made a major announcement on that this morning, as well as a major announcement on the student loan pause and a major announcement on income-driven repayment plans that really, I think, changed the agenda that we have today. So that's just a little bit of framing. That's where we were last week. That's where we were hoping to go this week, but we know that today is played out much differently than we might have expected. But we're all very grateful that you're here, and we will plan to give you as much information as the department can. And if we can't get all your questions answered through them, I'm happy to provide some additional resources and analysis. But I want to turn it over to our friends from the Department of Education. I want to welcome Ashley Harrington, who is a senior advisor at the Federal Student Aid Office. Very grateful that she's able to be here today, especially on a day like today. And do want to give her a little bit of grace. She had a presentation prepared. It's going to look, I think, a little different than what she had hoped. So we're kind of rolling off the cuff today, and we hope that you appreciate that. Again, we're not used to breaking news here on NCSL briefings. But Ashley, if you're able to join us and share your screen, I will turn it over to you to talk with our members. And one thing for our members, if you have any questions, right now we have all given the size of our audience today, we have everyone on mute and videos are turned off. So if you have questions, please put them in the chat and I can try to moderate them. And if Ashley has time to answer them, we'll give her some time to do that. But Ashley, I want to turn it over to you. You have probably tons to discuss with us. So thank you so much for being here.
No problem. And thank you so much, Austin, for having me. Yes, it is a very exciting day. We are so excited to have announced more targeted student loan relief today in the form of up to $20,000 for like millions of borrowers. And we're going to talk about that in a second. You may have just been watching the president announce some of this live and talk about it, but I'll share a little bit more. As Austin said, we really wanted to focus on PSLF today, but these things I believe work together, and we can talk about how they work together. So I am going to share my screen. I have a short presentation. I cut a bunch of things because of the announcement to give us some time to chat. So I will start there and share my screen. Okay, can you see that?
You're good.
Awesome. So, even before today, we had really prioritized providing targeted student loan relief and making our current system work better. I think Austin touched on a few of these, but thus far we've approved more than 32 or almost $32 billion in debt cancellation for 1.6 million borrowers. So even before today, this was the most that had been forgiven by any administration. And we had done that through making programs work better. So one of the biggest things, and one that I really want to highlight today, are the changes we made to PSLF to ensure that borrowers who are in public service got the credit they had earned. And so we've now approved discharged more than $10 billion under the waiver for more than 170,000 public servants through these improvements. And I'll talk a little bit more about what those improvements look like shortly. We also made major changes to how we do total and permanent disability discharge. For far too long, borrowers who were total and permanently disabled had to certify that they were disabled every year, certify their income every year, even though there was tons of data that we already had through matches with the Social Security Administration, through the Veterans Administration, that enabled us to just automatically provide this. So now we're automatically providing this relief to borrowers who fit our criteria, and that's already resulted in over $9 billion in relief for 425,000 borrowers who are totally and permanently disabled. We've also work to help borrowers who have been defrauded by their schools or who have been subject to school closures and have been harmed by that. And so that's resulted in the approval of almost $8 billion in relief for 690,000 borrowers whose institutions took advantage of them. The most recent this week was ITT. We've provided relief to Corinthian students, to a number of other students, to DeVry students. We're also now recouping for the first time money from DeVry. So this is not just about making borrowers whole, but we're also looking at how we hold schools accountable. And we're also looking at that through our ongoing negotiated rulemaking process. We have a proposed settlement through a major case that's going to provide relief to all the 200,000 other borrowers. So that's included in that. So for many borrowers, this is a game changer. Some of these institutions closed years ago. Many borrowers have been in limbo for years, right? And so the borrower defense in school closures is also very, very important and has been, a really big win for borrowers under this administration. So I'll focus on the limited PSLF waiver for a second, because that is this thing I have spent most of my time talking about for the past 8 months. And now I feel like I'm going to have to talk about something else in addition to PSLF. But we announced this waiver last October, and it basically lets borrowers get credit for past periods of repayment that they normally couldn't get credit for under PSLF. Over the years, there were issues with people not knowing what type of loan they needed, what type of repayment plan they had to be on, what counted as a payment for, and that could vary based on which servicer you're with. So under the waiver, we're not looking at repayment plans. We're not looking at whether a borrower made a payment or made it on time, or whether it was a little bit short. We're even giving credit for some periods of forbearances and deferments when we know that borrowers have been steered into long-term forbearances, or they've been in deferments that really demonstrate that they weren't having an economic hardship. So we're looking at that as well. And one of the biggest thing it does is it allows people who have guaranteed federal loans, FEL loans and Perkins loans, to consolidate to the direct loan program who have previously consolidated, to get credit for time spent prior to consolidation. This is huge. Prior to this waiver, 7,000 people had gotten forgiveness under PSLF. In less than a year, we have gotten that number to 172,000 borrowers have gotten forgiveness under this waiver. That's huge. It's a game changer. And there's over 1 million other borrowers who have gotten closer to forgiveness, right? Whether it's 12 months or 24 months or something in between, they've gotten that much closer. And so we're really excited about this as well, because we know that there's so many other borrowers we need to reach, especially because this particular program is time limited. Borrowers have until October 31st to basically raise their hand and say that they're working towards PSLF. So borrowers who still have non-direct loans, those guaranteed loans, have to consolidate into a direct loan. And borrowers who've never submitted a PSLF form have to do that. They have to do it all by October 31st. So we are on this massive push to get everyone enrolled, and we're hoping everyone here today can help us get this information out there, because PSLF, we're going to talk a little bit later about the new great forgiveness program that is not based on employment, but PSLF has no income restrictions. It's really about the employer, not the job. So if you're an employee at a federal, state, local, or tribal government entity, if you work for a 501c3 nonprofit or another nonprofit that provides a qualifying public service, which is things like early childhood education, emergency management, public health, borrowers after 120 payments can get all of their loans forgiven. And so that is huge, right? all of their loans forgiven. The average relief under PSLF is $50,000 or $60,000 per borrower. So that's a really big deal as well. And so this is just a quick summary of the waiver and how it works. So it doesn't matter the loan program. We're not looking at whether you had a FFEL or a Perkins or a direct loan. We're not looking at repayment plans. Normally you had to be on a standard plan or an income-based plan. We're not looking at that at all for borrowers who apply by the waiver deadline. We're not looking at loan type. There is some special exceptions for Parent Plus. I won't go into that, but I will share resources afterwards that go into more detail on many of those things. We didn't change the employment requirements that I just mentioned, except for the fact that normally for PSLF, you have to be employed by a PSLF eligible employer when you apply for and receive forgiveness. Under the waiver, that's not the case. So people who are retired or people who have moved on to the private sector or something like that, but already have their 120 months can get forgiveness under the waiver. And again, it ends October 31st, so we need everyone to get their stuff in by then. So this is just a recap of the huge benefits that have been provided to borrowers under the waiver. Another thing we did was in April, I know you talked about IDR last week, and so you talked about many of the issues with the program or some of the pitfalls. We also announced this IDR payment count adjustment that happened back in April. We haven't implemented yet because I don't know if you know, we got a lot going on, a lot of things we're trying to implement on our end. So that will be implemented later this year, but it's going to give borrowers credit for long-term forbearances, which we define as 12 or more months consecutive or 36 or more months cumulative. And borrowers will get credit for that towards IDR forgiveness, but they'll also be able to get PSLF credit for it if they certify their employment for those periods. So that's huge. We estimate we'll get an additional 40,000 borrowers who get forgiveness once this is implemented. And also we're giving credit for both IDR and PSLF if they certify employment for deferments prior to 2013, as long as it wasn't an in-school deferment, and for economic hardship deferments after 2013. And we're going to do all this automatically because the beauty of all the things that we're doing is where possible, we're trying to do this without borrowers having to take another step, right? We're trying to limit the administrative burden on borrowers and the administrative burden on the department by where we can just do things, let's just do them, right? And so we're going to do this automatically. The only thing that we need is for borrowers are going to have to still certify their employment if they want that PSLF credit. And borrowers who feel they were steered into a shorter term forbearance, so it doesn't meet that 12 months consecutive or 36 months cumulative, they can submit a complaint to their servicer and they can apply for credit that way. Okay, I'm almost at the student loan relief, I promise. We got a lot going on. The other piece, we just released details last week, I believe, is the fresh start for borrowers in default. This is really exciting as well. Many of you may be aware, I'm not sure if you talked about default yet, but we have over 7 million borrowers were in default prior to the payment pause. We are giving them the opportunity to come out of the payment pause, which was just extended today to the end of December, with a fresh start to be put into current repayment status. So that means they can get Title IV aid again. So many borrowers in default are non-completers and couldn't go back because they couldn't get additional aid to finish and then get the degree that would then enable them to pay their student loans. So by putting them back into, to taking them out of default, they can get Title IV aid. They get access to IDR again. So they have income-based repayment options, which they didn't have under default. They get credit reporting protections and they're cleared from the system we have called CAVers that stops them from getting credit like FHA mortgages and SBA loans that also enable them to build up safety nets that then could help them pay back their student loans. And we're stopping collections for a year. And this is a year from the end of the payment pause. And so, and borrowers have that for a year. And then borrowers in the meantime can get on an IDR plan, contact their student loan servicer or holder, and then they can stay in a fresh start after that year. But we're giving every borrower the opportunity to come out of this payment pause current. And so this is for all defaulted direct loans and defaulted ed held and commercially held FFEL loans and defaulted ed held Perkins loans. So this is really huge as well. And then today we announced.
Can I stop you real quick?
Yes.
We got a lot of questions on PSLF, and maybe we'll cover those now if you don't mind.
Okay, yeah, sure.
Yeah, I know this is, don't want to steal the thunder of the big stuff. But quick, I think they're all pretty quick questions. So one, you can confirm that now Perkins loans can count towards PSLF if they're consolidated into the direct loan program?
Sorry, say it one more time.
Yeah. The question was, do Perkins loans not count towards PSLF? But under the waiver program, if they're consolidated, they can count.
Yes.
Okay. We got some broad-based questions. I'll save those. Let's see. Some borrowers want to know if they're on an income-driven repayment program, are they going to get a notice on how to get the PSLF plan from their servicer, or how should they go about, accessing the PSLF program? Should they go through the department's website? It should be a combination of both. What's the best advice there?
Yeah, so to apply for PSLF, you want to use our PSLF help tool, which you can find at studentaid.gov/PSLF. And you'll go there, you'll log into your studentaid.gov account, and it'll walk you through. You're going to have to use your employer EIN, employer identification number, to put employers in, and then you'll get forms generated that you have to get signed. But no, for most all of these things, you want to go to studentaid.gov. Studentaid.gov is where you're going to go to consolidate, where you're going to go to sign up for income-driven repayment, where you're going to go to apply for PSLF. It's where you can go find out what type of loans you have on your aid summary. So for all things, the best place to start is studentaid.gov. If you have specific questions about PSLF, you can go to our PSLF servicer, Mohila. If you have just general questions, you can go to our Federal Student Aid call center, which is 1-800-4FED-AID.
Tremendously helpful. Couple more questions. One, can private loans be consolidated under the limited waiver program?
No. If you previously had federal loans and refinanced into the into a private sector loan, unfortunately, you can't go back. You lose access to all federal student loan programs.
A question on the deferment. So if a person had started deferment, I think this is on the IDR limited waiver, their deferment was prior to January 1st of 2013. Do any of those months prior to that date count?
Sorry, say it one more time.
Yep. This is not light subject matter that we're handling here. I think this is as it relates to the IDR limited waiver, specifically on the deferment, the retroactive counting of deferment months. The question is, if a person started deferment prior to that January 1st, 2013 point, do any of the months before January 1st, 2013 count towards the IDR limited waiver?
It's a good question. And we're calling it the IDR adjustment. I will get in trouble if people start calling it the IDR waiver. So please no, I call it waiver sometimes in my head, but I just want to say, it's a good question. So the January 1st, 2013 deadline is really only because prior to that, our computer system can't distinguish between different types of deferments, because there's tons of deferments, right? So our computer system before that, it can distinguish in-school deferments. So that's why we're still not giving credit for that, because borrowers were in school, but it can't distinguish other deferments, right? Because we really want the goal is really those economic hardship deferments, because most of those borrowers would have qualified for a $0 payment anyway. And so that's why from January 1 on, we can distinguish which ones are economic hardship deferment from January 1, 2013, and those are included, but all deferments prior to that are included because we can't distinguish except for that in school. Does that help?
I think so. I learned a lot from that. So appreciate that. I have a question on the PSLF waiver, and I'll just read it in full. I think it's most helpful. Can a person who has already paid off their loan in full by the time the waiver comes into effect still apply for loan forgiveness under the PSLF waiver if that person was still in repayment and making payments on the loan during a full 10-year period satisfying the PSLF requirements?
So that's a little bit complicated right now because we're in this payment pause. Normally, if your loan is paid off, that's it. There's nothing we can do about it. However, we've had a few borrowers who have made payments during the payment pause when you didn't have to. They thought they had to for PSLF, but under the payment pause, you can still get credit for PSLF without having to make payments. So you can get credit for literally, I think it's now going to be 30 months of not making a payment as long as you still certify employment. So if you made payments during the payment pause and that's what paid off your loan, you're able to request those payments back, and then they could reinstate your loan, only because everybody can request their payments back if they made payments during the pause when they didn't have to.
Okay, I think that helps. I'll let them reach out if they have more questions. Let's see, we have a question on this one might be too in the weeds, but I'm going to ask it. PSLF says they'll take electronically generated signatures. Will they take a handwritten signature if it's in a picture form?
Yes. So the three types of signatures that we accept are, it can be hand drawn on like your mouse, or like, you can sign on your phone now with your finger or with your mouse on your signature pad. That's fine. It can be a scanned photo of a handwritten picture that you insert onto that PDF, or it can be a literal wet signature where you print it out and sign it. It can't be DocuSign. We don't accept that. And it can't be like you go type in some cursive font. We are working on digital signature, and we'll have that available next year. So that's going to be really exciting. You'll be able to sign it. Both borrowers and the employers will be able to sign it online and submit it online. So that's great. But right now we can't allow that. And so it has to be one of those three forms.
Well, there are so many more questions than when we started. I'll try to get to a couple more, and then I want to let you get to the big announcement. And if I don't know if we have you for the hour. I know that this is a crazy busy day, so let me know what time you have. I've been covering. You got the full hour?
Yep, that's what I planned for.
All right, that's wonderful. I knew it was a busy day. I was ready to handle any of the other news that we might need to get to, but we'd rather hear it from you than me. Here's a couple more questions on PSLF. If a person has individual loans that all qualify for PSLF, is there a reason to consolidate them for the waiver?
That's a great question. The only reason you would consolidate loans that are all direct loans is if they have different periods of repayment that's post 2007. Like, I'm assuming that it's like all the different periods are eligible. So because if you consolidate them all together and like one loan has 40 qualifying payments and one loan has 80, if you consolidate before the waiver, under the waiver period, the entire consolidation loan gets those 80 payments at least, unless there's some, and if there's any non-overlapping payments, it'll get those as well. And so basically your newer loan is going to get forgiven sooner than it would have before. But if they all have 40 payments or something like that, no, there's no real reason to consolidate. You just need to get a PSLF form in.
That is tremendously helpful. We'll take a look at a couple more. Let's see, if we try to get additional payments credited under the PSLF waiver, do we have to resubmit this info again when the new considerations come out later in the year for deferment?
Nope. Once you get your credit, that's your credit. So you don't have to get to 120. You just need to get your stuff in, and whatever payment credit you get, that's yours. It just means that going forward, after the waiver is over, your account, you need to make sure that you're on an IDR plan and following the normal PSLF rules, or if we have a new rule come out, follow those rules. But no, that's your credit. It's not going to go away.
Okay. Do payments made while serving an AmeriCorps account?
Yes, AmeriCorps is eligible and is eligible PSLF employment.
Great. And I think there's a question. I think you answered this, but just to make sure, because there's so many different loans. I think this is a FEL loan eligible for forgiveness. Yep, that's what I thought. Let's see. I think that dispenses with most of them. Oh, good. Here's a good one. Simple one. How do we find out how many payments have been made?
That's a good question. So once you apply for PSLF, you'll be able to track it on the servicer's website. So some people are still on FedLoan, but it's MOHELA going forward. So either FedLoan or MOHELA, whichever one you're on right now. You'll be able to see it on studentaid.gov on your dashboard. It'll say how many months you have towards PSLF. And if you're trying to figure out if you're trying to like guess how many months are going to count before you apply for PSLF, a couple of ways to do it. You can go to your studentaid.gov dashboard and you go be able to click on each loan and go through, and it'll show you like breakdowns of like when you were in repayment, when you were in forbearance, and you can kind of count it there. You can also request a full repayment history from your servicer and look at that as well.
Okay. Well, that was a lot of questions. We're really glad you're here to answer all of them. I hope that was helpful. If you didn't have your questions answered, we'll try to get to them. And I know there's a number of questions in the chat that I think relate to the big announcement that I think some are aware of, but we want to hear from you and as many details as you can share. Actually, what happened today? What happened this morning?
Yeah, so it's very exciting, and I just have the details that are publicly available, but happy to answer questions. The Biden administration announced a new student loan debt relief plan, and it has three parts. The first part is that we've extended the payment pause through December 31st. So I know a lot of borrowers, we were really worried about payments were starting next week. It now starts after December 31st. So many borrowers can breathe easy because of that. We're also providing additional debt cancellation to more borrowers in low and middle income families. So this applies to borrowers who during the pandemic had an annual salary of less than 125,000. If they're single, if they're married or head of household, less than 250,000. And they will get up to $10,000 in debt cancellation. And if they were a Pell student, right, they will also they will be eligible for an additional 10,000 in cancellation. And so it says up to, because if you qualify for that, but you have less than 10,000 or less than 20,000, you're not going to get extra. You're just going to get your loans wiped out. And so it's gonna wipe out the debt of about 20 million folks. So it's pretty exciting. A good chunk of the people who are in default, who have been struggling the most with student loans. A lot of folks. And it's going to be for many borrowers, if we already have their income information, we're going to do this automatically where possible. Other borrowers, we're going to have it be as simple as possible to attest to their income. So it's a big deal. It still does take time to implement, but it's very exciting. This is really the Biden administration delivering on a promise made during the campaign to provide real relief to student loan borrowers. And so up to 20K, depending on whether you're a Pell Grant recipient or not, and limited to borrowers who have incomes of less than 125 or 250,000 for households. And then the third part is we also announced today, and more details to come on all of this. Stay tuned, and I'll tell you where to go to stay up to date on the newest releases. Is a new IDR plan. Many of you may know we've been in a rulemaking period for a while. We just closed the comment period for public service loan forgiveness, interest capitalization, borrower defense, and others. There's another loan period that I think is about to wrap up. For some other rules on gainful employment and institutional accountability and things like that. But one thing that was discussed during negotiated rulemaking, but we hadn't released a rule yet on, was a new income-driven repayment plan. So we announced that today. We now have this really great proposal. And so now for borrowers with undergraduate loan, they will now only have to pay 5% of their discretionary income instead of the 10% that is on the best plans right now. So that is going to cut so many borrowers' payments down. And when you couple that with the forgiveness, so many borrowers are going to have a very different, more positive loan repayment experience. We're also going to protect more income. Prior to this, the repayment plans there protect income at 150% of the poverty line. Generally, we're changing that to 225% of the poverty line, recognizing that that lower number didn't protect enough income for borrowers. We're also going to have borrowers have the opportunity to get forgiveness after 10 years if they had balances below $12,000. And again, this is a proposal, right? So there will be time to comment. It's not necessarily the final rule that will come out, but this is what the proposed plan looks like. And no borrower will have to pay interest because it's going to cover the unpaid monthly interest. So borrowers won't have to keep watching their balances grow, whether they have $0. Many borrowers are making payments bigger than $0 and still watching their balances grow under current plans. So it also addresses that. So those are the basics. Now I'm ready to take more questions.
All right, we have a few. I think the pressing question that everyone is asking this morning, and I've seen it a couple times in this chat, can you speak to which federal loans this applies to? Does it apply to Parent Plus, Grad Plus?
It applies to all loans that are held by the Department of Education.
Simple enough.
So basically, if you're on the payment pause, it applies to you.
Yep. This was a question, and I think this would be an easy answer. Is any of the forgiven student loan balance taxable income?
It's a good question. It's not, because under the American Rescue Plan, there was a provision that was put in to make student loan relief through 2025, I believe, not taxable. PSLF forgiveness was already not taxable. That's in the statute, but no student loan forgiveness until 2025 is taxable. So no, it will not be taxable income.
Very helpful. Another question I have, this was an insightful one. If your if you get 20,000 in forgiveness, you're Pell eligible. Does that include any level of Pell eligibility, even if you're not getting the maximum Pell? So it's not prorated based on whatever your Pell award was, full. All right, very helpful question I had, and I definitely saw it in the chat here. Here's a quick question. I saw this on Twitter today, and I almost noted it because I thought it might be helpful today, and I now regret it. How do you know if you got a Pell Grant?
Ooh, I mean, that's a good question.
Okay, I'm gonna.
You should, it will show up on your studentaid.gov dashboard. Like it'll show loans and grants if you got grants.
Okay. Yeah, I saw that there is a portal somewhere, and I had the link earlier. It was on Twitter. I'm gonna try to find it.
It was a studentaid.gov?
It was a studentaid.gov. It was a sublink to that, I think. So
yeah. So if you log into your account though, your dashboard says your grants and loans.
okay. Well, there's where you need to go. The other question we had was about the student loan pause and interest accrual. So does this mean that with the loan pause that interest will continue to not accrue and not be capitalized on loans for the next 4 months?
Yep.
All right, simple enough. I'm going to look through. I think that's all the questions that we had, at least in the chat so far. A couple questions that I have, and we can let you go. And if everyone wants to stick around, I have some additional analysis that I can share on things that we've seen in terms of the effects of this decision and what it might mean for state legislatures. But before that, any details that you can talk about on how this forgiveness would be applied? I know that there was some talk about whether the relief would be applied to the interest first or the principal, and then how whether or not the loans would be re-amortized, and then how the payments would be set forth for those that don't get full relief. Any insight that you can offer there?
We're going to submit more on that we'll be releasing more on that in the coming days.
Got it. And then any sense of timing on when or how do borrowers take advantage of this loan forgiveness? Is there a process? What can they expect there?
Yes, so we will have we'll have more information and the ability for borrowers to attest to their income if they need to. It will be in practice before the end of the up and running before the end of the payment pause. So it is going to take us a couple of months to get everything up, but it will be up before the end of the payment pause.
Oh, this is a good question. The loan forgiveness only applies to tuition, not room and board, correct?
It applies to the loan. So we are not going to go back and look at what was spent on we're just looking at your loan.
Yeah, and just as a reminder, the federal financial aid can be applied to any aspect of cost of attendance, and that is defined pretty broadly. It includes room and board. So again, it's just your loan balance. As long as your loan expenses were approved by your institution and through the Title IV program, should count towards this. I'm going to take a quick scan. Do we have any more questions? Okay. Well, Ashley, thank you so much for being here. We are so grateful. This is an incredible opportunity to get some breaking news right from you all.
No problem. The one thing I forgot to say is sorry, because all this is happening and people may not know. It is a PSLF day of action for government employees, and we're asking everybody to share this on social media, share it with their networks, and urge people to get their applications in. Even borrowers who will qualify for this for debt relief, many borrowers are still going to have debt left over, and so PSLF may be an option for them, right? So we want to make sure borrowers know about and they take advantage of this waiver. We have toolkits that we can point you to. I'll send it to Austin that has like sample email, social media. Join us in this day of action. Encourage people to apply. Share over your networks. And yeah, just really appreciate you helping to get the word out about all that we're doing.
Awesome. Well, thank you so much for joining us, and we'll let you go, although you're welcome to stick around. For those of you who are still here, happy to kind of give some analysis on what impact this is going to have on states, and actually what it means more generally. This would be some breaking analysis to the announcement that we just heard. So I'm going to share my screen and just kind of walk through some things that I think, if you were a legislative staff, some things that you might want to know in terms of implications from this decision that will affect states and state legislatures and borrowers generally. So just to go through here, this is, I think, most everything that Ashley just covered is covered on this slide. Again, I don't think this maybe was mentioned that this, the 10,000 a borrower for income less than $125,000 a year for individuals. A couple of things that I think weren't mentioned. The sense here is that the income levels will be based on your 2021 or 2020 or 2021 income levels. Something I don't think she mentioned is that this is expected to apply to loans that were dispersed before July 1st of this year. So if you had a loan originated before that date but not dispersed, it may not count. And of course, if you've taken a loan since that date, it wouldn't count. But if you had taken out a loan and spent money and received funds from that loan prior to July 1st of this year, you will be eligible for this broad-based forgiveness. That means that there are a number of students that are currently in school that will be eligible for this program. And in those cases, their income levels will be based on their parents' income levels. But for everyone else, if you are a graduate or actually you do not need to be a graduate to apply for this program, as long as you have taken out student loans and have your own income, that will be the threshold that will be used to determine your eligibility. And I think Ashley mentioned that the Department of Education is setting up at some point what they're calling a simple application to attest your income levels. There's an expectation that forgiveness may be automatic for about 8 million borrowers because the Department of Education knows their income levels. So that's something to watch for. I will know that I've seen on Twitter today if you are trying to find out about your eligibility for this or through your loan servicer, you're not going to get any answers right now. I think that certain servicers' sites are down. Actually, the Department of Education's financial aid website was also very slow this afternoon. So you're not going to be able to get information from your servicer just yet. They, of course, just learned about this today, but of course, they're going to be responsible for carrying out certain aspects of this program. So that's something that I think you'd want to be aware of. Again, a question I asked her is whether or not or how the forgiveness would be applied, whether or not it would apply to the interest and then or the principal. There was supposedly, this was the reporting from about a month ago, there was a memo floating around the Department of Education that basically outlined the department's plan for implementing this program. And of course, that might have changed between then and now and even the coming days. But the suggestion from that reporting and from that memo, which we haven't been able to read the memo, just the reporting, would be that the relief would be applied to likely the interest, then the principal, and then the loan would be re-amortized. And likely the department would try to reduce the amount of that students or borrowers are paying each month rather than reducing the amount of months that they needed to fully pay off those loans if this action did not totally wipe out their debt. And speaking of, Ashley mentioned this, but this is a very helpful graphic in terms of the scale of this potential decision. I'm also going to talk about whether or not this decision will stand. There is significant concern that this will not withstand challenge in court. So don't want to get ahead of ourselves here. I do want to cover that. But should this stand, this would affect millions of borrowers. I know Ashley had mentioned that the department is estimating that at least 20 million borrowers will have their loans completely wiped out by this action. And there was an expectation that if you forgave 10,000 in loans alone, that would wipe out the balances for about 15 million borrowers. I think they're estimating that additional $10,000 for Pell recipients would wipe out debts for another 5 million people. But then just doing some quick math, I think that about 10 to 15 to 20 million additional borrowers would receive at least partial relief through this action. So this could affect between 30 and 40 million borrowers of the 45 million borrowers that are currently out there. So it could be quite widespread in terms of its impact. But I do want to get into a little bit of what the budgetary cost of this is, because that is something that I think state legislatures should be well aware of. Here's some estimates on how the benefits would be distributed by income. Now, I do want to stress that this analysis was based on just 10,000 in loan forgiveness with a little bit of an income cap. Adding in that Pell forgiveness component is going to skew the benefits back towards lower income levels. But a lot of the benefits were weighted towards more middle income earners rather than lower income earners at just that 10,000 level. This was some analysis from the Urban Institute. There's some other analysis that was released just yesterday that I guess is now out of date, given that the $20,000 announcement for Pell forgiveness. But this was from the Penn Wharton school, that they also tried to do an estimate of the benefit distribution and also found similar things, that middle quintile and fourth quintile earners, those would be earners that are making between $60,000 and $80,000 would be sort of the target for the amount of for the concentration of benefits. But with this Pell eligibility, it is going to move that back. I'm not sure, how accurate this is, but the Department of Education, in its announcement today on the White House website, is claiming that 90% of the debt cancellation benefits will go to borrowers earning less than $75,000. That is obviously very different than the original numbers, and that might be because of that $10,000 additional forgiveness for Pell recipients. In terms of the cost of this was from the Center on Responsible Federal Budget. This, of course, needs to be updated. They had originally ran their numbers and thought that if $10,000 per borrower were forgiven, that would essentially amount to about $360 billion in loans being canceled. Now, as we'll kind of explain here in a second, the actual budgetary impact is probably going to be less, closer to, at least originally, it was be $230 billion. And that's because they were estimating that a significant amount of loans were already. I can see slides, but you can't see slides. Now you should be up. So this is the 90% of slides. Here's the estimate here. Thanks for to the audience for pointing out that I'm not on the right slides, at least on the presentation. So here, we're back at it. $360 billion was the original expected budgetary impact. But the new impacts expect that this is going to be close to $400 to $600 billion of loans being forgiven. And then the budgetary impact will be a little bit less than that because, again, as we'll kind of talk about, there were already a number of loans, like we talked about last week, that were going to be forgiven through existing authorities. So there, if you're estimating this out into the future, that does change the impact of this. But in terms of raw amount of student loans forgiven, it will be pretty significant. We don't have an exact number. And of course, experts are currently trying to do the math, but the latest math I saw about 30 minutes before we got on here was an estimate of $400 to $600 billion in loans being wiped out. And this is another estimate from the Urban Institute, basically tracking with this. And again, this was without that Pell forgiveness worked in there. And the reason that the budgetary impact will be a little bit less as a result of this decision is because there is a significant amount of loans that were expected to be forgiven anyway. For example, there were $133 billion in loans that were already eligible for public service loan forgiveness, and that number is probably growing due to the waiver program. So I think that knocks down some of that final count. As we talked about last week, the income-driven repayment plan program was set to provide a lot of forgiveness over the next 10 years. Again, we estimated, not we, but the Congressional Budget Office estimated in just 2020 that about $20 billion in loan forgiveness would be supplied through existing income-driven repayment plans per year. So the amount of loan forgiveness that was already in the pipeline was pretty significant before this announcement. So that's why the total amount canceled versus the budgetary impact may have some discrepancies there. So something to be aware of. In terms of how quickly, what kind of impact this will make in our total national student debt. As you're aware, there's about $1.6 trillion in federally held student loan debt. The expectation is that with this action, you're going to see $500, $600 billion of that portfolio wiped out. But the estimates are that with current pace of continued lending, that the loan portfolio would grow back to its current levels in somewhere between 4 and 5 years. And so this would make a dent in the student debt issue, but we continue to issue loans. This portfolio will continue to grow. I think the estimate that I last saw was that there's an expectation that $1 trillion in loans will be dispersed over the next decade. So it's certainly a measure that provides some level of relief, but it is not something that solves more longstanding issues with the loan program. So as I talked about earlier, this is we're all operating an assumption that this action will stand up, but it more than likely will be challenged in court. Again, this is the president taking action on this through executive authority rather than Congress, and there's a lot of questions as to whether or not the president actually has authority to do this. I'm not going to get too far into the legal implications, but I'll just give you a little bit of background. There is some statutory basis for the Secretary for giving loans. Just this afternoon, the Department of Education finally released a general counsel memo that explained the president's rationale for doing this, and they're sort of basing this in what's the HEROES Act of 2003, which is a post 9/11 bill that essentially allowed the secretary to grant relief from student loan requirements during specific periods of emergency. And in the memo that the general counsel released this morning, they are defining the pandemic as an emergency and are using this action to try to ameliorate the financial impacts on borrowers. At least that is their justification. In there have, of course, been many interpretations on whether or not the president actually has the authority to direct the Secretary of Education to forgive student debt in this way. There was a memo that was released by the Trump administration's Department of Education before they left office in 2021 that made the case the secretary does not have that authority. This Department of Education rescinded that memo yesterday and inserted their new memo in which they do believe the president has the authority. Speaker Pelosi last summer said that she did not believe the president had authority to do this. As of yesterday, she apparently has read the new general counsel and believes that now the president does. But of course, again, you're seeing differing interpretations from a lot of different authorities here in just the last year. There was widely an expectation that the recent Supreme Court case, West Virginia versus EPA, may have some implications as this, if this is challenged in court. That decision essentially said that it, limited the ability of federal agencies to assert new authority from existing statute in matters of vast economic and political significance. Many experts and legal watchers believe that this loan forgiveness action would qualify under that sort of impact. So again, we don't know, whether or not this action will stand. Certainly, the department is asserting a legal basis for taking this action, but it's hard to imagine that this will not be challenged in court. But that was just for broad-based loan forgiveness. Again, the student loan pause was extended another 4 months. As we talked about last week, the pause has been on since March of 2020. Through just May of this year, it had cost an estimated $110 billion. The cost of the loan pause is about $5 billion a month, and the average borrower has benefited about $4,000 from this loan pause. And so that's been, from those last estimates, extended out at least 7 more months. So, it looks like the final cost of this program is going to be somewhere in the $150 billion range, if not a little more, maybe a little less. And again, that is on top of the benefits that are being provided through the broad-based loan forgiveness today. So not insignificant benefits being provided through this loan pause as well, which is going to end up at probably going on for a little more than close to 3 years. Actually covered this on the new income-driven repayment plan. Again, it's a proposal, but it is significantly more generous than existing income-driven repayment plans. There are 4 currently existing plans. We kind of talked about that last week. This new plan is significantly more generous, like I mentioned, especially this only applies to undergraduate borrowing. So that is one thing to note. But one thing that was very interesting and about this is that borrowers would not see their interest accrue or capitalize on their income-driven their loans and income-driven repayment plan program, which does not happen under existing plans. That would be significantly different. Just to give you an estimate of what impact this might have on borrowers, this was some data provided in a release from the White House today, but they suggest that payments would be significantly less for borrowers under this program. For example, if there was a teacher making $44,000 a year, they would pay about $200 a month in the current most generous income-driven repayment plan. But their payments would be reduced to $56 a month under this new plan. Of course, lots of details yet to be released about that, but this would be pretty significant. In its own right, this income-driven repayment plan would be significant news. Of course, it's being paired with 2 other major announcements that have happened today. Just to give you a sense of how much more generous this new income-driven repayment plan would be, the blue line that you see on your screen, this is some analysis from Jason Delisle of the Urban Institute. And this is actually operating on some past assumptions about the new income-driven repayment plan that I think actually have been changed a little bit. I think this actual proposal is a little more generous than even the proposal that was being modeled here in this graph. But you can look under the current income-driven repayment plan, you are going to be more or less paying back the loan before you receive forgiveness by 20 years. But under this, your payments on that red line are going to be much smaller. And so you're going to be paying off your loan much slower. And it could accrue, you just saw on the last slide, savings of $1,000 to $2,000 a year. But over the course of a loan's lifetime, if it's on a 20-year repayment plan, those benefits would be, anywhere from in the tens of thousands of dollars. So that's loans that will be eventually forgiven by the federal government. So very significant. So quickly, I just want to talk about what's next for states. I mean, part of the reason we wanted to have this is because we knew that there was so much going on in the student loan space and wanted to keep you all informed of those actions. But we also know that they are, I think, going to have pretty significant policy impacts on our higher education landscape, both at the federal and state level. I'm going to pause right here. Let's see. So the big impacts that you're going to see, I think, over the next few months are calls for increased accountability and increased funding for higher education. Already, we've seen a number of groups call for states to essentially blame states for not investing enough in higher education. That's been a pretty consistent theme that you've seen over the last few years. We know that the federal government, at least the Democrats in Congress, have proposed many times state federal partnerships for education that would ask states to enter into a financial relationship with the federal government. That'd be very new. I think you'll see renewed calls for that. But specifically, I think you're going to see increased calls for accountability and cost controls in higher education. I think that the loan forgiveness occurring in the size and scale that it is sort of an indication that the way that our states and the federal government share the financial responsibility for higher education seems to be perhaps misaligned. And so I think there's going to be a lot of conversations that the federal government and state legislatures are going to be having about, how to ensure that college is affordable and that the benefits of subsidies and financial aid are well targeted. So I think that if this action stands, it could have very significant implications for how we think about higher education in our country. So in its own right, very significant action for student borrowers, but the downstream policy effects could be pretty significant, and it's something that we're certainly paying attention to here at NCSL, and something that we're going to continue to pay attention to. So wanted to just provide a little bit of framing here for our session. So thank you so much for being here. This has been, we kind of hoping that we would time it around the potential for this announcement to happen. And turns out we hit the nail on the head, which was good, but also made our day a little more exciting in terms of just trying to cover this and make sure that we had all the latest information for you. So we thank you all for joining us. We're going to have recordings of this week's and last week's briefings up soon. We're going to put together a blog post that gives all the details on the announcements today, as well as a lot of the information that we've covered over the last couple of weeks. So we're hoping to put together a pretty extensive blog post that would be sort of one-stop shopping for everything that's been announced here. And of course, this announcement today is just one step in a very long implementation process. So we'll be monitoring that closely. So again, thank you all for being here today. I'll give you a couple minutes back. And we really appreciate your participation with NCSL. And we know that we'll be talking about the implications of this decision for many months to come. So thank you and have a great day.